Hey, how's it going, guys? Welcome back to the mentfx private mentorship. This is webinar 19. Welcome. So first of all, who here is new? Like first time ever, we always have new people. And as we always have new people, I'm going to quickly start off with the safeguard and basically make it known that you may be confused as shit after this first webinar. I do say a lot of things that entail a lot of the course elements, including previous webinars. So if it is very complex and confusing to you, don't worry about it. Things will begin to click over time. Make sure you work through the course, the contents, and all the other important areas of the group. Very quickly, before we continue, I've had a few messages from a few people, including in the mentorship, and something that I feel some people don't do, even if you're new, is not actually giving the time to read the welcome, read this. All of these are very psychologically important. I add things as time goes on, and I probably will be adding some more, but these are really, really important to your own development and growth. And then following that up with actually reading through the start here into the section 1 through 3, into the live tradings, into the other course materials with a good focus on everything provided in them, as well as every single one of the webinars. Yes, I know it sounds like a lot, but again, envision that you're paying me $100,000 for a year with me, okay? Would you watch everything? Yes, you fucking would. So take the time, put in the time to watch everything, allow the concepts to sit with you, watch how the concepts evolve over time, and begin to create a system for yourself. And again, you'll understand all this thing that I'm talking about in terms of system creation, refinement, your edge, etc., as you work through all the webinars, including what I believe to be one of the most important psychologically relevant webinars thus far, that being webinar 18. So we went through a lot of in-depth stuff there. So I'm just going to leave that out there, but I wanted to make sure that a lot of you understand that there's a lot to what we do. As you get to understand it more and more, it becomes simple, but it's not going to become simple if you don't allow the complexities to be ingrained in your head first. So ultimately, it's a weird way to think about it, but it becomes simple after it becomes complex. So the more complex it gets, the better for you, even though you might think you're unlearning or you're actually going through the process of actually taking something in and having the mind shifts or mindset shifts that you need to have before everything really begins to click. Okay, so last webinar, we spoke a lot about win rate and we spoke a lot about psychological factors and how they're important. I've been reading a really good book. I recommend it. Probably gonna start a little book club in the mentorship, not even gonna lie, because there's some books that are insane for your own profound knowledge and understanding. It's called The Complete Turtle Trader. Amazing book about this guy who's a multimillionaire, makes a bet with his buddy that you can teach Forex, that you can teach trading. His buddy basically said, there's no way you can teach it. It's ingrained in you. You're either successful or you're not. There's no way you can teach it. And this multimillionaire said, nah, fuck you. It can be taught. He brought on about 10 people from a pool of 1,000 applicants, gave them all like $500K to $1 million and made them trade a very simple trend breakout system, literally based on just buying the highs or selling the lows and then buying it and then selling it higher or buying it back lower. And about 4 years later, they transformed it into $150 million, right? And now today they own huge hedge funds. They've improved their own trading systems. And it's basically all about how basically at the forefront of the entire system exists the idea of management. And the way these people were successful, you might not believe it, but you go and read the book, is not that they had a high win rate or anything like that. Their win rate was actually so low that a lot of them had about a 50 to 60% drawdown in some months, but every year finished very positive, about 100% in gains, right? Name of the book is The Complete Turtle Trader by Michael W. Koval. Amazing book for understanding risk management. Talks so much and so in depth about the fact that you can lose or have a strategy that is low win rate, but in the long run, because of our expectation of value or expected return, is profitable. And that's exactly what this book is about, and how these traders, known as now the turtles, went on to become some of the best traders in the world, started the best funds. And I mean, one of these guys who was worth like nothing, who was just one of these students, now manages over like $2 billion or $1 billion. So, and it's all about how a systematic way of approaching the market. And what's cool about this book is they actually are fully technical. So at one point, there's even points about news, and they're like, news is fully bullshit, right? Like kind of the stuff I teach you guys, which is ignore the news, everything's in price. Allow the people that want to do the fundamentals do their fundamentals and trade that, we can see those orders going in and out. That's what we do. We follow in the footprints of the people that are like beyond smarter than us, right? The people in, this is why it's even in the book, it kind of says something about the lines of, we don't trade markets, right? We trade price. And the idea of that is that these people would diversify their portfolios into soybeans, wheat, commodities, currencies, indices, individual stocks, oil, heating oil, stuff like that. Very random shit that none of them actually knew anything about. And the main thing they said is the soybean farmer or the soybean analyst that goes and tours every soybean plantation on Earth has all the knowledge he needs to go and put these orders into the market for his hedge fund, his institution, whatever it is. And when he does that, you are going to be seeing that delivered in price. And when that trend, whatever you call it, starts, that's where they begin to get involved. And the coolest part about this entire story is that if you look at the trade histories, because they have them in the book, if you look at the trade histories of every single trader, they ranged anywhere on a monthly basis from negative 60% drawdown to plus 100%. And they would literally be down negative like 60 to 80% on an account and make over 100% overall in the year. And like one of the coolest quotes that stuck with me, and I'm dropping this for you guys because you need to understand this. Again, this is kind of an ongoing thing from webinar 18, was so one of the guys that right now is worth about $2 billion, that owns about the $2 billion the hedge fund, $2 billion hedge fund, and trades only using literally indicators. Like he's a full-on trend follower. He uses indicators to follow those trends, right? The main thing he said was, what people don't understand is that, I'll be down most of the year, and it's usually about 3 weeks in that entire year that I make the money I make for the returns that I have, right? So when he catches that, so basically the way they trade is trend following. They try to they basically buy and sell every breakout on each side, and they take a lot of losses back and forth. But when that trend hits, they pyramid into it. They're not scared to let it run. This is the idea of when you have a system like this where you're taking multiple minus ones or multiple break evens along the way, but when stuff like this hits and you let it run, that 26% makes up easily for the 12 losses you had in a row. And quickly those basically become nothingness, right? They just dissipate because you're like, oh shit, it really didn't matter. If you remember USDCHF this week, that was my main trade. Fucking beautiful. Literally this 1 hour play right here. I took about, I think like -6 or 7 before this trade on, I think AU. I think I posted it in there, but like -6 or 7 on AU. Then about, I literally think like 8 break evens on EU. And then this trade right here ran 60%. Now I didn't make 60% on it. I partialed at some lows inside of it, right? But again, that blew every single loss and break even out of the fucking water and doesn't matter anymore. This is the idea of trend following, of working under a system we work under. And some of these traders in this book went in depth on saying that the best systems are the ones that actually have less than 50% win rate. And the idea of trading a mean reversion strategy, aka a strategy that is based on something happening a lot of the time, are the ones that bankrupt a lot of hedge funds and institutions. Because what they do is they have about 6 or 7 years of profitability, but then when that one mean reversion doesn't happen, so that normal probability of it happening doesn't happen, they lose the entire fund. Right? Because again, like I always say, when you have a lot of money, you trade just like a little emotional freak, like a lot of us starting off, but you don't lose it all because you can quickly make it all back with all the money you have. But in the end, it works out the exact same way if you don't have a set of rules and a strategy you're following with an edge that you understand. Right? The edge for a lot of these hedge funds is, oh, look, we can satisfy our customers with a 92 or an 80% win rate over the next 6 years. So they're all going to invest. And when we go tits up, we just made billions of dollars in commissions and billions of dollars on basically fees to manage the money that we don't care. And that's how hedge funds basically operate. A lot of them, not all of them, but that's ultimately how they operate. They make most of their money on managing money and on the fees that people pay them to manage that money. And when they go broke, they go, oops, right? But during the time, everyone's happy because they're making money. One of the coolest things about this book is that this person that made hundreds of millions of dollars a year didn't like to manage other people's money because the other people, the clients, didn't know how to respond to these drawdowns. At one point, this guy was like minus 50% drawdown, and they were like, I gotta pull out, without recognizing how his system worked, without recognizing that a week later, that minus 50% is transformed into plus 200% because of the way his strategy worked. And to this day, like I said, some of these turtles went on to make some of the biggest hedge funds and are profitable over 20 to 40 years. So it's a really interesting story and a deep dive into basically kind of the way we trade. We don't necessarily use the trend following that they use, but what we do is we get involved with the trend and we allow that trend to knock us back and forth until we catch the trend that really just puts us above the line. And it really doesn't matter that we just took, minus 1, minus 2, minus 3, minus 4, B, plus 60, right? Because then you begin to actually recognize how a system creates its own edge over time. And in the long term, the long span, if you look at 10,000 trades, there's net profitability versus something that has an 80%, 90% win rate, which gives you +1, but every time you lose, it's about -5. You don't realize that actually ends up biting into your profits and actually makes you lose all your money in the long run, right? This is where the expected value, expected return, all that stuff comes from. So yeah, amazing book. Give it a read. I think you guys will learn a lot from it. It's actually very important to the way we trade. It's not direct because they do use a different methodology, but the conceptual framework and the foundation of what they do is the equivalent of what we do, right? Should literally get an affiliate link for that. Goddamn. All right, let's go up here and start working through some stuff. As you all know, start of every week, I'll kind of go over some of the stuff I was looking at, why I took some stuff, what you guys might have taken. I know some of you got this GJ trade, which was fantastic. We'll talk about that GJ trade as well as my trade on UCHF. I'm not going to go over all my losses because it's literally just too hard to find them, but there's like 3 or 4 losses in here, right? I was just looking at that sell and you can see it even held. I just wasn't able to get the entry that ran. I wasn't able to get filled on that. So, it happens, but that's how this strategy for me works at least. And I understand that my edge works because despite all this shit, UCHF clearly paid off. And what's funny is it didn't pay off with this move. It didn't pay off with this move. It paid off with this move, right? This is the importance of understanding. We're not here to catch highs. We're not here to catch lows. We're not here to hold out the entire trend. We're here to catch the moves that run to the points that we want to target under a probabilistic standpoint that we understand is going to create an edge over the long run. Right, based on the type of testing you do. Because I know there's some people here that do actually have 80%, 70% win rates, and they're going to remain profitable. Because when they do lose, those losses do not exceed the wins, and also because basically the expected value is positive on that. So it's not like you can't have a positive win rate and be profitable. That's not like, I'm not saying that's impossible because it's fully possible. I have good friends that do that. But the main thing is to recognize that just because your win rate's lower does not mean you're unprofitable. It's really important to understand that. So this book can help you guys a lot with that. I think it's amazing. I just almost finished it this week. Just was reading over it, just taking notes on it. Because it still helps me psychologically and still can help a lot of you guys psychologically. But yeah, check it out. Check it out. I think Raymond is one of the market makers. Yeah, him sitting there with his 6 monitors, dude. He's doing something. Been in this group for almost 5 months, but starting my learning now. Oh shit, that's awesome, dude. Let's go webinar 19. Beautiful. All right. So as you all know, feel free to post some questions. I will do my best to work through all of them. I'm gonna first go through the questions here and then talk about this trade. I'm not gonna talk about all the losses because it's literally not important because the losses are the same as the wins, but the wins just run. So that's all you have to think about, right? These are my wins. Here's how they look. Entry, that's my win. Here's how my losses look. Entry, loss. Entry, loss, entry, loss. Entry, break even, right? So on and so forth until entry plus 60, right? That literally, this is how the losses look. So there's no difference between the losses and the wins, but I'm going to show you guys the wins because I want you guys to understand how price delivery looks like when you are on the right side of the market, because you guys need to understand and create confidence in repetitive actions. Also, something that's clear and important about this book is that both traders, the ones that we're teaching, believed that human nature tendencies are always working against you, which is 100% true. We all know this. If we go into this market not knowing shit, you're going to be unprofitable. Even if you're lucky in the first few times you trade, even in the first year, you're going to end up in shit's creek if you do not have a system that you're following. A lot of what this is about is becoming a systematic thinker and thinking in terms of only rules and sticking to those rules despite being in large drawdowns, despite losing heavily, right? So on and so forth. And it talks a lot about really cool risk management types. So I'm actually going to bring this up with you really quick because this risk management tool, I might actually start utilizing it because I think it's genius and I think it's really cool what they did. So what they did is, let's draw a little graph here. Actually, let's go to Paint because Paint's the best. Here's a little graph. Okay, and ultimately what they did is they said, here's your balance, okay? Here's your balance. Let's say you have 10K, let's make it 10,000. Okay, 10,000. And here is your time. Okay, so what they did is they were swing traders. They were operating on the daily charts. It's not really important. Let's think about this in terms of risk now. So we shouldn't really think about anything ever in terms of numbers. They always thought in terms of risk. They always thought in terms of RR because they didn't want these traders that were now basically brand new, came off the streets, like all random people that they chose to teach. They didn't want them thinking in terms of, oh, I have a position that's up 2 million right now, right? Because if they're trading a very large account, that 2 mil doesn't mean shit if it's not at least 3 RR, right? Something like that. So they only thought in terms of RR. They didn't care if they had $100 or if they had $1 billion. Everything was thought about in the terms of RR. So ultimately, 10K, 1% of that is about 100, right? So let's think about what's 5% of that. So it's 500. So really quickly, we're just going to throw this into terms of 5%, right? So this difference here is a 5% difference in your balance, okay? So then you have 9,000, same thing, 5% difference, or the entire difference is 10%, right? So on and so forth, 8,500, 8,000. And then on the top side, we can go, 10,500, 11,000, 11,500, so on and so forth, okay? And then 12,000. Okay, so what's cool is here's what their risk management worked like, and this is straight from the book, but I think it's so smart, and I think it might actually help a lot of you that hate these large drawdowns that you can get into. So ultimately, they start with their 10K, right? And the 1% of 10K is, as you all know, $100. So they'd be risking, let's say, $100 on this trade, right? Great. They start risking. A lot of them were started months or went for months in drawdown, literally just taking trades left and right, just lose. Literally, that could be their entire year, like I said, and 3 weeks out of that year, they hit the trend, and then that's it. That makes up almost everything, right? And usually much more. They've literally all finished in or around 100% to 300% every year for 5 years, and that's how they transformed and made collectively as 10 people $150 million, right? Under just being taught they never learned before. They've never been traders in their life. And this guy went out of his way to hire people that were mathematicians, that were music industry specialists, that were psychologists, that were high school graduates, non-graduates, college graduates, Harvard graduates, shit school graduates, hockey rink players, Navy SEALs, just the randomest of all randoms to prove the point that this can be taught, right? It's a really cool book. You guys should give it a read. But ultimately, what the rule was that if your balance went down 10% total, you would assume a risk of double, not martingaling, not doubling up, but you would assume a risk as if you lost 20%. Okay, so what I mean by that is, let's say you started taking trades at 1%, right? Again, this is normal 1%, so that means it's not just going to look like that, right? To go to minus 10% total. Instead, it's going to look something like this because it's minus 1% every time. So it's still under the idea of compounding, right? So it's coming down with minus 1%, comes to 9K, okay? There we go. So now we're at minus 10% on the account. Now, at 9K, theoretically, you should be risking $90, right? But instead of doing that, because what they're assuming is that if losses are starting, that's a trend of losses. So the losses will continue. So instead what they do is they assume that they're not down 10%, but they're down 20%. So what they do is they say, okay, let's assume we have 8K in the account. Even though they have 9K, they assume 8K. And now they risk 80 a trade instead of 90. So what happens is this even slows down even more and starts to look like this, right? As it gets towards that point down there, very slowly. And then if they do hit their trend, a lot of the time it looks something like this. And then back to the same thing. It starts going down linearly, then even less because they're reducing risk, and then even less if they're reducing more risk. And it's just doing this literally for a whole year if it has to. Oops, shit, right? So slowly, boom. slowly into like very into boom, right? And this is how they made those 100%. What they did is when they were losing, they substantially lowered the risk based on their account balance. They wouldn't just risk 1% over and over again. If they were down 10%, they literally reduced their risk as if they were trading a 20% loss. And this is what allowed them to sustain very large losses. So I think it was a really smart risk management tool. I think it keeps your head in the game. And I think it's cool to basically witness that your losses are not only linear, but also negatively linear, like in almost a negative way, like in a really good way. And your losses are, your wins are exponential. This is how profitability is made. You have a linear, but not even linear, like you literally have a tiny sloping loss train, and you have exponential looking growth trains. And that's where their money was basically made. So I think it's a really smart risk management tool. I might even start employing it in my own trading because, I've been down in 10 drawdown. That's normal. 10 losses in a row, it's not crazy. So when that happens, to reduce risk, it doesn't have to be much, right? It's reducing it from a $90 to $80. In some cases, if you're trading, a 100K account, that's a difference of 9K to 8K. To 8K risk reduction. But that 1K allows you a buffer of continuous strings of more losses. And again, your losses don't look like this. Your losses look like this. And your wins still look like this, right? But the difference is this allows it to get over break even or even much higher. And this allows it to maybe get back to break even because this nature of linear progression downwards could bite you in the head, bite you in the whatever, right? Basically, their argument was if you have linear losses and exponential gains, you're always going to be profitable in the long run. This is why I also preach, understand your edge. Anyway, let's continue here. Sorry for the little rant, but again, I think that this will help you guys in ways that you might not even see right now. I'm currently ordering this book. Nice. Me too. Oh, shit. What is this book called? Write the name, please. I'll write it. Oh, he posted it. Okay, nice. The Complete Turtle Trader. Yep, a great book. Had a credit on Audible. Just got it. Hashtag book club. Nice. Just bought it. Oh, shit. I made everybody buy a book. I love it. Drop the affiliate link. Shit. Check my video on Showcase. I'll have to check it out after this. Don't let the -1 get to you when they're part of the game. We need to take them to get the +50. Yep, they're nothing more than expenses, right? That's how you have to think about it. You should never be thinking about yourself in losing like 1K or losing 2K. You're not actually losing that. You're just paying a -1 expense, right? This is why they never thought in terms of profit. They couldn't. If someone asked you how you're doing and you're on a multi-billion-dollar account and you said, oh, I'm down 600 mil, that hurts. But if you say, I'm down, -30 RR, but it's all good because, the next trade is +200, like whatever it is, right? It's easier to think in terms of RR than it is ever to think in terms of profit. This is why when people upgrade from flipping accounts, which I think is a full scam, when they upgrade from flipping accounts to real larger accounts, they lose them because they're viewing profits as numbers and they're diverging again from their strategy. So whatever they were doing that was profitable, even when they were flipping or even when they were on a smaller account, they're diverging from it because it looks like they're making more money on their higher account, but in reality, they're starting to eat into their own edge by taking profits early and not letting their winners run, right? That's ultimately what happens. So that's how a lot of people grow an account and then could even go broke doing it, right? Because they're not psychologically stable to handle that type of switch. Honestly, I feel like I learn more with each -1 I take. Honestly, for me, the beauty is I don't learn shit from my wins and I don't learn shit from my losses. Right? Because I understand what my edge is and there's nothing to learn from them. All there is to learn is, oh, good, it's another expense. Like that's ultimately where you want to get to. You want to get to a point where when you lose, you're not just going, what could I have done better? At first that's fine because, there's going to be things that you can do better and there's going to be things you can refine. But at some point you have to get to the place where when you take a -1, you don't go, what could I have done better to not take that? Because that's what starts to throw you into the pursuit of a high win rate system, which doesn't make sense if your edge exists in that lower win rate with higher R, just like we viewed in live trading number 3, right? Hanton, can you simply explain in the light of everything you taught us, what happened that caused the AMC/GameStop hype a couple of months ago? Just liquidity at the top side. I'll run on them. Like it's never, sometimes things are just going to go like crazy and go insane, but like I don't think of anything in terms of the fundamental side of things, right? All we see is there's an expansion on the top side, structure begins to become bullish. That bullish structure is now being held at new supply and demand zones. Structure is being held at new supply and demand zones, and we're bullish. Structure is being held at new supply and demand zones, or ment blocks, however you want to think about it, and new ment blocks or supply and demand zones, right? Keys breaking structure, new supply and demand zones, keys breaking structure, and we're off, right? And the way you manage it, just allowing it to run. Breaks new structure, last supply and demand zone, right? Last down move before the up move, taps into it, off we go. We're even higher now, great. Creates a low, breaks, okay, we have a new supply and demand zone. Actually right here, you can see the lack of, the little inefficiency, boom. Taps into it, makes a new high. Okay, great, we're still bullish. Finally breaks down, we're bearish. We come to test the last up move before the down move, we're bearish. Do we come to test the last up move before the down move? Nope, we break down again. Okay, we're bearish. We come to test the last up before the down move. Okay, we're bearish. There's nothing here that's insane. It's a structural play that ended up to be a bigger structural play. It's the equivalent of like Bitcoin taking off. It's not always predictable, and I don't do the fundamental logic behind all this to go and look for stuff like this because I couldn't care more. When the moves happen and when they put in motion trends, you are going to be able to trade those trends if you understand why we do what we do. When this trend is put in place, that trend is going to remain if it wants to remain, and it does. And you get 1, 2, 3, 4, 5, 6 entry levels that you could have potentially been able to take on this before it failed, at which point you had 1, this inside structure here, 2, and now 3 sells to take down, right? And again, we take off again. Okay, break a structure higher. We don't get to our S&D zone. That's fine. It happens. Inside structure break, test of the last buy, sell before the buy, last S&D zone, off we go. Test the last S&D zone, off we go. Do we get to this one? No, we don't. That's fine. Break structure, last S&D zone, test. Do we get above it? Nope, we finally shift bearish. And we follow the structure back and forth. It doesn't matter what we're looking at. If you're here to try and catch moves like this, you are done for. Because you will aim to catch these moves over and over again, and you're going to get liquidated nonstop until it finally happens, and it might take you back to break even, if even that, right? There's no point to look for moves like this because in the big span of things, if we even log it, like, so this is log, you can see it just looks like a normal trend. It's a normal establishment of a trend and then continuations within trend over and over again, right? Well, trend that you could take all the way up until it finally fails, and now we're bearish. We come break down structure again. Last up move before the down move, continue bearish, right? And now we're still bearish, right? We can maybe look at a daily. Actually, we can be bullish from here, to be honest. Nah, actually, I'd be still bearish. So honestly, right now, if I had to trade this, it's an ugly ass market, but I'd be like, okay, if price gets here, I'll look for a reason to short. I'll just look for distribution to sell down. We already have some liquidity created. That's great. We get distribution, we sell down. It doesn't matter. It's just trend. It's just structure being created, right? So yeah, same thing happened with AMC. Like, hey mentfx, I'm on my break right now and I have to go out. Maybe you could cover this before I leave. In Trade Talk, you mentioned in watching how Bitcoin breaks. Oh yes, so understanding how something breaks, type of breaks you have. That's actually something I'm gonna save until like, actually no, it's 4:30, so we can deal with this. The basic assessment of how something breaks, why I said that, and why I look out for it, is the fact that I'm not always just looking at, for instance, I'm not gonna look at Bitcoin. Actually, GJ had a decent example of this. Actually, UJ did as well, right? Yeah, UJ had a perfect example of this. Okay, cool. So remember how last week we were pretty bearish on this, still bearish, and then we had this break higher. Now, when we had that break higher, I told you guys that I'm not bullish on this. Seeing this break, I basically said, no, I'm still bearish on this, despite the fact that we technically shifted this structure, and now we should be going bullish, and it might still go bullish, but I told you guys that I want to see this low cleared, right? And the reasoning for that is because of the type of break that occurred here. Yes, there is a structural break here, but the way the breaks happen on 2 levels is what decides for me whether I want to use that as a real continuation or as something that's actually acting as a mini consolidation or liquidity grab. So those 2 things of the type of break you can have is, one, is it a wick break? Is it a wick break, or is it a candle break? Right? And number 2, and I know that, like I say, there's candles on some level in here. This is where the second part of this kind of comes in. It's how far above did we break? Was the break grabbing liquidity or continuing a push in a given direction. So this is where a wick break can still mean that we're bearish or bullish. So if this wick technically went something like this, I actually would have been more bullish on this market. And the reason for that is because the orders that you'd have to put into this market to run it this high ultimately make it less of a grab of this liquidity, but make it more into a continuation play. So whether this was a wick or a body, I'd be bullish on it. Now, the fact that we reached that far above, if you want to think about this break right here, right? This comes below and then instantly snaps back up and becomes bullish. Now, how big was that liquidity grab? That big, right? There's the box. It was that much and then it went up. Look at the grab here, right? This liquidity grab or this wick is ultimately the same size as the previous thing that grabbed liquidity. So from that standpoint, is it more likely for this to be a continuation to keep going long, or is it more likely to be a snap back that grabbed whatever buy stops were here to now go short? In my mind, under my conceptual approach, still taking into account potential trend, it's a test of a higher area of trend, which would be, in this case, this impulse, to now continue short and not continue long from here because of this type of break. So this is what I meant by make sure you pay attention to the type of break. So like if we were watching this S&D zone for buys, okay, let's say we were, and price came into it and kind of just went right through it, but then stopped and created a move down that was maybe this size and instantly snapped back in. My instant judgment is not to keep going short. It's actually that we're probably still stuck in whatever consolidation area or whatever accumulation or distribution range we're still in here, and we're probably going to create a new intermediary bullish trend which we can ride back up to the top side, because this move has shown us that it actually just wanted to grab sell stops rather than continue a bearish push down. And even though a lower time frame is going to show you a candle break here, the type of candle break, even though the candle might close here, is not enough for me to justify a continuation, right? So for me, if this type of candle right here, this type of candle formed right below this, right? And that candle, like basically, if we look at this range of this candle, we just draw it in, boom, and we just project that down, you can see how the difference between this grab or this break would justify whether it's a candle or a wick to be a grab or a continuation. And if it was like this in the form of a candle, I'd be looking at the supply zone that would probably be formed here now to go short. You see that? So this is why I said pay attention to the breaks, because just because it's kind of what happened on GU, right? So like, where was it? Yeah, equal lows, right? Now those equal lows were taken out and that was a bearish move, right? So now we're bearish, but, and you can notice the candle still closed down, but notice how instantly right after it snapped back up, which means on a weekly, you're probably going to see a wick. Yeah, there we go. Great. So on a weekly, you can clearly see the same thing. Yes, it's breaking structure down, but also this move and the way it's snapping back up. So you can literally go in the past and find where was the last liquidation that continued the opposite direction. Well, technically you have this right here, right? Here's your liquidation, took out whatever lows were here and then continued. Okay, great. Let's compare those liquidations, right? It's as simple as that. We'll go over here. Right? Does this look now like a reason to continue going bearish? Now again, it might go bearish, but I'd be more bullish on this. Why? Because despite the fact that it looks like we're breaking structure here, the fact that we ran under and instantly snapped back into the market, it basically tells me that we want to still be bullish on this market, right? So there's a little bit of divergence you can make from structure, but again, you have to realize that we're not always studying one structural play. We are looking at multiple structures, and we are not always going to be correct about structure. So we analyze the market under our basis of liquidity grabs as well, and the way that that liquidity is grabbed or the way that a market wants to continue. For instance, when the market is making whatever highs and lows in here and makes this move here, does this move here look like a grab of liquidity to you, or does it look like a reason to keep pushing momentum to the top side? Clearly, this is momentum to the top side. So clearly whatever S&D zones are left, which in this case would be the last unmitigated zone, right? The last down move before the up move, acts as an area you can go long from. And then again, you want to target the highs. Now, as price gets there, this inability to push higher, this mini move above, even though it's a break of structure bullish, the fact we come above and snap right back in shows us what? That we are actually probably more bearish on this market, despite the fact that we're in a bullish structure, right? Because again, no structure has to hold. If you go and look at live trading videos and stuff, you realize that the probability of stuff holding actually is less than it not holding. But when it does hold, the areas of interest you're able to take entries from are what support those trend moves that get you into the large wins, right? And just as per the book. So hopefully that made some sense, Alberto. I hope that helped out, and hopefully some of you that have been looking at wick breaks like that understand this. And again, if this is too confusing right now, focus on just the structure element too, because even if you thought this was bullish, your confirmation area probably would have been this. And I mean, clearly this got blown out. I mean, like almost instantly. There might have been some trade in there. It is a weekly, so yeah, there probably was a trade in there. Actually, no, there really wasn't. Bearish, 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 blows it out. But then again, as it blows this out, it breaks up. And we understand that even though it blew it out and there's some kind of breakdown, the fact we weren't able to push impulsively down and are now breaking structure up means we can probably be bullish on the short term. And as we look at the demand zones, and they also have the same thing happen, very mini break, but then that wants to push higher, we understand the confirmations present inside of here, because there's going to be Wyckoff in here, like guaranteed. Anyone that's been here a while knows there's Wyckoff in there, is easily areas for you to look to go long from, to start targeting highs, the next structural highs, and potentially the highs here, which wouldn't have been hit. We then shift again, and now we're again bearish. We shift again, we're bearish, and again, same thing here. It does invalidate the zone, but it also does it in a way that clearly shows there's a reason to snap back down and continue bearish. And whatever's inside of here, which clearly is going to have some kind of Wyckoff with the test of this, and there's going to be another double MB entry here and another one there. Like, it's just, you can follow it with your eyes almost. If you don't know what I'm talking about, make sure you've seen the other course content that you could have taken back down, right? So hopefully that makes sense. This is why sometimes even in a market that might look like it's shifted, I'll still have a certain bias on it, because of the type of grab or the type of momentum move it's had, right? So although I do argue, and a lot of you know this, although I do say a lot of the time that a wick on one time frame is a body on another, it's also important to understand how those wicks and bodies are formed and how they move. And when it's, whether that's a body or a wick, this is more bullish for me than it is bearish, right? Because we're holding whatever bullish move we're having. And even if we're not, this liquidity grab and this failure to go lower means that we're usually, most of the time, going to run whatever buy stops we can on the top side, which would be buy stops, and potentially buy stops to continue that bullish push. Because this can just as easily, as you all know, come up here and then finally go into our short plays, right? And then something like that, right? And your entries begin to exist at certain areas here, right? mentfx, check my video on showcase doing 10 to 1,000 in your 2 weeks. First week gone. I only your 3-step trade, 1 BOS, 2 liquidity, and 3 POI. That caused the effect. That's awesome, dude. I'll make sure to check that out. That's really cool. If you got 10 to 1K. I don't know what your risk looked like on that. I don't always condone flipping an account like that. It's amazing that you were able to do it with the strategy, if you use proper risk management. Very impressive. If there was a lot of doubling up, or a lot of funneling into trades, or a lot of increasing your leverage for no reason, I don't know how much I'm gonna like that. Because I still condone always following a rule. Whether you have a $100 account, $10 account, $1,000 account, $1 million account, does not really matter. You need to have a set of rules that you're going to follow for yourself, and that you're going to follow because you understand there's an edge that exists with them. And you're not going to cut your wins because you understand how your wins are going to run, and you're allowing your losses to hit if they need to hit. Right? What was that book called? The Complete Turtle Trader. Yep, exactly. Bro, break down the losses. I want to see how it looks like when you lose setups. The exact same way, dude. Exact same way. Let's see what we had in here. I also missed the trade on EU. I'll show you that. Oh, there was actually also losses up here probably. Yeah, I mean, like, this is the type of things that can happen to me, and this is what I don't think a lot of you understand, is that, there's going to be great setups, and literally this liquidation happened within, I don't even know, like 30 seconds. I lost like, what, 1% of the account in 30 seconds, right? People don't realize that this is also normal when it comes to trading. You need to be willing to have those losses happen to allow those wins to happen. This one actually broke even. I got into a second one, and then that lost. And then this one didn't get tapped. I was so fucking sad. Holy shit. Yeah, so this was not a loss, but you can see how that was where I wanted to enter, and that's where it went. So that's gonna happen too. But I'm not gonna FOMO into these moves because I understand that when my move does want to happen, I'll be able to capitalize on that. There's no reason to FOMO into stuff like this. And yes, you're going to miss moves that you predict, right? I was able to predict this down move, but it didn't matter because I wasn't able to get in on it. Same thing with EU. I'll show you guys really quick. See where it is. Where was it? Oh, it was more recent on EU. EU. There we go. Yep. Same thing happened. Was it here? Oh, yeah. Okay, I wasn't able to get an entry here as well. So I'll show you guys that right now. Let's see where it was. Was that just a -1? Or was this? Oh, there was this break even. I think I sent this one out. So again, same thing. Was looking to buy this up to come and run this high. If it did, again, same thing goes. Plus 25%, which would be great. Ended up running to SL at about 1 to 2.5, and I think that only just made it above the price of commissions and stuff, right? So that's fine. That's what's gonna happen with some moves. See what we had here. Oh, same thing here, right? Notice how, despite the fact that I was bearish and despite the fact that it broke that high, for me, oh, maybe it did not break that high, but for me, the way it broke, the way it went above my zone is clear to me to be a liquidity grab rather than a continuation bullish. So as it broke down, I wanted to look to short this down, and looks like I just got oh, no, there we go. Okay, this is what it was. So as this broke down, I looked to short here, and you can see that short never got hit, and then we ran to my liquidity point down here, that low, beautiful delivery, never got to short into it. That's how it goes sometimes. You're gonna miss trades. That would have been a plus 27% if it ran, right? Like, it's normal. You're going to miss trades. You're gonna let stuff run without you. Really good ones are gonna run without you. You're gonna get stopped out of great trades that then run without you. But if you understand your strategy and you understand your rule-based system, you don't care about that because you understand that when it does hold, that's where the money is made. And again, that's not gonna happen from just trading a live account and just going, all right, fuck it, I'm ready to pile in because I believe the strategy will work. No. You need to go and undergo the testing and building the confidence in the fact that the strategy will work, right? So yeah. Raymond, cool, I like your desk. Yeah, he's got a nice desk. Look at him. Nice ass desk. Curves around too. Mine's just a one-seater. In a previous webinar, someone was asking about FTMO drawdown conditions, which you said you have to take 5 losses, but you lose maximum 2 times in one area. Can you touch back on this place? What? In a previous webinar, someone was asking about FTMO drawdown conditions, which you said you have to take 5 losses. No, not 5 losses. 5% loss in a day, which if you're risking 1% in a day, you can't take 5 losses that day. But if you're risking 0.25%, which people do and start to do, especially with strategies that are more like these, where you have to really wait for your entries to happen, you're gonna have to reduce that because sometimes, 5 losses in a row is really normal, or even 10 losses in a row. So people reduce their risk to 0.1, 0.25%, and are able to do that like that. You touch back on this, please. Yeah, I hope that answered that. Not too sure exactly what you're asking here, but I think there's just a little bit of confusion about percentage risk, which again, does not ever have to be 1% over and over again, right? One of the things that one of these turtles did when he went off on his own is because he understood that clients are less resilient to a strategy that has big drawdown, because clients can't handle it mentally. People will literally pull their money out if they're allowing you to trade it. If it goes down, 10%, they're like, oh, this guy doesn't know what the fuck he's doing. So what he did is he reduced his risk substantially. They used to risk about 2% on each trade, and they'd be down, like I said, 60% drawdown until they'd be 100% up for the year. And what he did is he reduced it to like 0.2% or something even less. So what his returns looked like on a year-by-year basis began to be more in the 8 to 20%, but clients like that more. And because he's managing multi-billions of dollars, the clients don't care about 1,000% return. What they care about is, I don't want my money to be lost, right? So because of the inability for the clients to be resilient to the larger drawdowns and to allow for those bigger wins to happen, you have to cut down the losses. That's what's happening here. If you're not resilient enough, or if the rules of a prop firm are not resilient enough for the way you trade, you need to cut down your risk. Because if you have a profitable system that you know is profitable, get with the prop firm, use less risk, save up your money, get rid of the prop firm, and go trade your own money under the risk that you're okay with trading. Right? If that means that you're okay with taking 40% drawdown before you hit your 130%, by all means, that's fine, right? But FTMO, you can't message them and say, hey, listen, guys, I know you only allow 10%, but hear me out. I have an 80% loss drawdown max, but I'm guaranteed to make money every year. Is that cool? Can you guys let me lose 80K for you? They'll say, fuck you. No, because they have their rules. And if you want to trade with their money, just like if you want to trade with a client's money, you need to bring down your risk to, to alleviate their fears, because they're not traders. They don't have the psychological, capacity that you might have developed. So, and they have no rhyme or reason to understanding the way you trade. You can't, like, even these guys that used to trade with, like I said, they only follow trend with indicators. And to explain that to a client is impossible, because the clients are like, there's no fucking way that following an indicator or following price is enough. You need to do your research, you know? So you need to understand that, you know, if you want to trade for someone, you're going to trade someone's money, prop firm, client, whatever it is, you need to be able to change your strategy based on their conditions. Now, once you make the money you need to make and go off on your own, you don't have any conditions. You can literally go risk 10% a trade if you want, right? I don't condone it. I don't think that's smart, because, you know, 10 losses in a row is not that hard. And there's going to be times where, you know, your 90% win rate strategy means that you lose 10 in a row. Because remember, a 90% win rate strategy doesn't mean that you're going to win 9 out of 10 trades. What it means is you could win 90 out of 100 trades and lose 10 in a row. Or it could also mean that you win 9,000 out of 10,000 trades and then lose 1,000 in a row. What your strategy needs to do is take that probability into account and allow yourself to be able to be in a drawdown of over 1,000 losses if it has to be, right? And that's going to happen from proper risk management and from proper edge refinement, right? So hopefully that made some sense. Not scared of losers. Exactly. I think this book will help you guys a lot with not being scared of losers, because that's one of the craziest things. They spoke about it. Like, even for the first 2 years, they were like, this shit doesn't work. The losses are too much. The drawdowns are too big. There's no way. And then they're all multimillionaires, right? Like there's a process that needs to undergo that creates the confidence in yourself to actually execute properly upon a system. Okay. Psychology is 80%. Yeah, literally. Hey, mentfx, I'm on my break right now and I have to go. Yeah, I think I went over this. Yeah. You don't have to copy paste like 5,000 times, bro. I see all the messages. Don't worry about it. Like, we're good. Breaking the habit of being yourself is the next book club suggestion. Dr. Joe Dispenza. Oh, cool. Yeah, I had my aunt actually worked with him for a while when he used to travel a lot. I haven't read most of his stuff though. I think he's just law of attraction stuff, which I fully understand. I don't think I need him. I prefer these books. They're more fun. Well, it happened to a friend of mine. He was making a lot of money and Elk of a sudden lost everything. Yep, exactly. That's how a lot of hedge funds function. They make a shit ton of money for 7 years. Their clients are beyond happy, you know, with their 20%, 30% a year. And then 1 year they are out of business. And that's it, right? That's how it works. That's why you don't go for strategies that are mean reversion, aka high win rate, focusing on the most probabilistic, but instead focusing on where you can create an edge for yourself and actually make money over the long run. That's why I stress backtesting on a large level. Right? And again, as I always say, people argue that you can't learn from a demo account. It's pure bullshit. You can create the most confidence out of a demo account or out of a real backtested strategy, because you can see with your own eyes the type of long-term results that following a set of rules can have. And if you can create that set of rules and look at it and see that, oh, it's clearly profitable, then you have that confidence to remain and stay consistent. And if you have on top of that risk management rules for yourself, like having your risk every time you lose 10%, right? Or allowing your winners to always run, insane things can be done, right? Hey, mentfx, I'm on my break. Bro, you don't gotta. I'm leaving now. Hopefully he answers it. Oh my god, dude. I see all the messages. So basically they're having their risk after a X amount of losses. Not halving. They're assuming they lost double of what they lost. Remember, it's not if they're risking 2%, they don't reduce it to 1%. They reduce it to 2% of an overall loss of 20K instead of 10K. Also, please don't annotate. Yeah, thanks. Besides VP, any other good indicators for trend? Any other good indicators? Volume profile. This is going to be another section. Yo, Yuri, please don't draw on the screen. This is going to be another section we talk about where we're going to get into algorithmic trading. And in that algorithmic trading, I actually don't use volume profile at all. So we will talk about algorithmic trading and ways of catching trends like that. I think it's more long-term based that you'd want to do that on. I think No Nonsense Forex is a great fucking YouTube channel on that. But that's more of a long-term goal. I still love being on lower time frames and waiting for my entries, right? And it gives them the ability to double their amount of opportunities in the markets. Yes. Yep. So to confirm, every 10% you drop an additional 10%. Every 10% you drop, you assume you've dropped 20% and take the risk of that value, right? So again, if you have a 100K account, and you get down to 90K, right? Let's say you're risking 1% a trade, so that's 1K a trade. Now, instead of risking 900 a trade, you instead risk as if you have 80K, which means you, instead of risking 900, risk 800 per trade, right? And as you do that, if you get to 80K, you don't risk 800 a trade. You assume you dropped, because now you dropped 20%, you dropped 40%. So you risk as if you had 60K. So you risk 600 a trade, right? You understand how that goes? So as you risk, it doesn't just look like this with a 1% decrease every time, but it also looks like this. 1% decrease every time, 1% decrease every time until, pew, right? Hopefully. But I mean, these people did it for years, and this guy still has a fund, and he's doing it for over like 40 years, I think, and he's profitable trading under these guidelines with reducing his risk, but also satisfying his clients at the same time. Once I had 10 losses in a row, I called the police. Nice. That's the buffer. At what time they increase or double their risk? When they get back up, right? So if they're at 90K, they're risking 800 instead of 900. If they're at 60K, I'm sorry, if they're at 80K, that's 20% down, so they assume that they're at 60K, which means they're risking 600. If they get back up to 90K, now they're risking 800. If they get back up to 100K, now they're risking back to 1K, right? And as you go up, you don't double risk. You still increase. So if you go to 110K, your risk becomes 1100, right? It's still 1%. But if it now goes down to 100K, you don't risk 1K. What do you risk? You risk as if you lost 20%. So on the... what is it? 20%. So that's 2200. 2200 minus 100. Oh, minus this. I'm literally dumb. My brain is like fried. Minus 22. So yeah, if you go to 107,800, you go to 107,800, you don't risk the 1%, you risk less. I'm not gonna do all the math right now. My brain is fried for that right now. Like, I've been doing too much math. But that's how it works, okay? What if max losses with prop firms are 10%? You reduce your risk. I'm late. It's all good. It'll be up later for you. So for someone who has an FTMO account, how to manage our risk? This is regarding the daily and max loss. So first of all, if you have an FTMO account, that means you've tested your strategy, and your strategy clearly doesn't ever go into a whole 10% drawdown. Instead, you have a higher win rate, which is fine. But if you're someone that has a win rate that's lower, you need to account for that, like I said, and reduce that risk. Lowering the risk, instead of 1% per trade, do like 0.25. Exactly. Simple. Better than losing the entire account. Better to make money than lose the entire account, always, right? Like that's how it's always gonna be. Just for everyone, it's not my affiliate link for Amazon. We'll just copy pasted the browser link. Yeah, nice. People, he's dropping gold right now. Make sure you're taking notes. Don't look at your losses trying to see what you've done wrong. Do the same thing over and over again, and you'll be profitable. Well said, Roosta. And a lot of you, especially those of you that are new, might not know this yet, but after you see Live Trading 3 and read through some of the stuff that people have posted, you're going to see very soon, and I've seen how a lot of you have created real back tests and are now seeing how a win rate of 40%, 30% is creating over 50% to 100% profitability on the account, like RR-wise, which is insane, right? And just seeing it dropped in the chats is motivational in its own way. But you're not going to know that or experience that or build a confidence in it if you don't do it. So if I literally gave you the holy grail right now and just said, stick to this exact freaking system, a lot of you would not be able to do it because you haven't seen the confidence behind the results, right? And that's where the back testing comes in. That's where looking at all that comes in. Like literally, after reading this book, just so you know, they unfolded the entire system of what they did. Here's their system, okay? I'm gonna show you the system right now. This is the system they used. They had this thing, an average true range, and that's it. Okay, they had two of these. One was on a 55. Let's get rid of this. Okay, and one was on a 20. Great. There was another system. I'm not going to talk about all that right now. There's two systems they could use, but these were ultimately the entire system. This was the whole system they used to make $150 million. And all they did All they did was waited for a breakout of the blue line. So the blue line's here. This is a breakout. They would buy the breakout, put a stop loss of 2 times this thing. So this is 2.29. So they would make it 4.6. So this thing would be 4.6, 4.6 right there. They'd lose 2%. Okay, wait for the next breakout. Breakout happens here. They get in on that. Again, same thing. What's the value at? About 2.06. So about 4.12 would be their stop loss. 4.12. So here's your -1 that they would have taken, or -2%. They take -2%. Okay. Now what they would do is they wouldn't just take winners and let them run, and they would manage to the red line. By the way, red line stops here, so that's where they get stopped out. They don't just enter like that. They would actually pyramid into their winners. So they would pyramid at every one increase. So they would enter here, 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 and here, and overall, all these together would still be a 2% max risk, because it's pyramiding in, or it's like 3% max risk, and all of them would be exited again at that red line. They would enter 5 units max, that's what they called it, five trades max. And now that -2% gets translated into +7, so +14, +12 is 28, plus another 12 is, what is that? 28, 40 is 40, plus another 10 is 50, plus another 10 is 60. So they'd make 60% on this. Again, this is Apple, and Apple's been trending really well. So this is, this is an example of it. But like, I was doing this on Verizon, and you lose over, like, I think you lost like -40, -30% on that or something. But this is their entire system. This is all they did for 5 years straight, never diverged from it. And they would take huge drawdowns with -2s that would be stuck in consolidations, because not all markets move this well. Some, they'd be like on corn futures. Here we go. Let's go to that. Right? They'd be on something like this, and they'd take a sell into this, stopped out. A buy, no, nothing yet, nothing. They take a buy right here, stopped out. A sell right here, stopped out. A sell right here, we run. And this would be their +12 after losing, 8 here. That's fine. Buy right here, stopped out. Sell right here, stopped out. Buy right here, and we're off. Manage all this until it stops out right. Nope, still doesn't stop. Until right there. This, 200% on the account, guaranteed, easily. This is how they made their money, right? This is it. This is all they ever did. Not even shitting you. This is the entire system they used to make $150 million over 4 years, right? It's as simple as that. But all they had to do was stick to the rules that said, be ready for these fucking drawdowns, right? That's it. There you go. Liquidity grab, liquidity raid. Asking yourself where liquidity rests. Yep. This guy answered my question without even reading the chat. I got you, dude. Do you have a video on breaks? The whole mentorship is basically, we study breaks of structure, right? And continuation. That's it. What's the one thing that had the biggest impact on your trading journey? Recognizing that you can make money when you're wrong, and recognizing that a win rate doesn't mean shit, I think, is the main 2 things. And the rules govern everything, right? That's pretty much it. I think those are the 3 main things. Once you actually understand those 3 things in depth, and the way to understand them is to do everything that I preach to you guys, you're set, right? Like, if you understand that your rules are everything, then there's no diverging from them, and you understand that. You can't diverge from rules, whatever those rules are. That's 1. There you are. You can't diverge now. 2, you can make money when you're wrong. Why? Because when you buy from a zone or sell from a zone, you can still have the mitigation you need to either break even or even partial, in some cases, based on your own rules. Great. So even when I'm wrong, I'm going to make money sometimes. Or if I follow my rules, I'm going to have profitability. And 3, what did I say for 3? Shit, I already forgot. Whatever 3 is, follow that shit too. I forgot what I said for 3. What was it? Biggest impact on my journey. Rules, making money even when you're wrong. Oh, and win rate. Doesn't mean shit. Which kind of is in line with those, right? Which basically means you don't have to have any positive win rate. You need a positive expected return, which you can go and learn about in webinar 18. I'm unclear about utilizing clean Wyckoff versus messy kinda / sorta Wyckoff. When you're viewing charts with us, you sometimes mark up Wyckoff, but you other times just say there's Wyckoff in there. Higher highs, lower lows. That's because, as you know, we use the concept of Wyckoff and not just a direct rule for it. Can you please discuss usefulness / relevance of messy / partial Wyckoff structure? I just use structure. That's the literal truth. But I understand that when structure shifts back and forth, that we're undergoing some bigger level of accumulation distribution, right? So I allow myself to wait for the Wyckoff or the area of distribution or accumulation to be confirmed by newly inputted structure into the market. So ultimately, like I said, always, section 3 is a confirmation section. It's not based on something telling you need to trade the breakout of the sign of weakness. You need to trade the test of the UTAD. It's none of that. It's understanding that structure can either be trending, or structure can do two things. It either one, trends, or it two, accumulates or distributes. That's all the market can ever do, is trend or accumulate or distribute. If you understand when trend is accumulating or distributing and waiting for your opportunity, great. If you know when it's trending, you can find your opportunities, great. Right? So that's what I mean by when I look at an area and just say there's Wyckoff in there, right? Because everything, ultimately, any consult, like literally Wyckoff. Like if you put a box around anything, it's Wyckoff. It's a weird way to think, but that's the way it is. That's how it should be taught. A lot of people teach it wrong, saying, here's your phase A, you need your phase B, you need your phase C, it needs to go lower, like you need to get in on that. Like there's no direct way to trade it. All Wyckoff is, and all it ever was an explanation of transferring weak to strong hands. And that can be viewed in the form of the AR breaks, the confirmations of your Wyckoff schematics, the structural shifts on the inside of the Wyckoff schematic, the structural shifts on the higher time frames, which validate Wyckoff schematics, so on and so forth. Or the double MBs that get validated. Like, we know this is Wyckoff. We don't have to go in and then go and find we don't have to go spring, STB, ST, SC. Oh, nice. No. We can go in here and say, clearly we're in a bearish trend. Clearly the last down move before the up move is this one. And clearly we shift that here. So clearly whatever Wyckoff structure, whatever accumulation or distribution or whatever transfer of hands occurred here, it's shifting now. And I'm willing to now go long, right? I don't need to go in and go and label every single part in here, right? I like to think of it as if I see some sort of liquidation, they intend to take the prices higher or lower. Yep. This fundamental has an impact on the market, and how? It's a very weird way to think about it, but in our books, no, not at all. Think about it like this. You are not smarter than the smartest person in the world, okay? There's someone that is smarter than you by 5 billion percentage points. Like, you don't even compare to them. They're literally, if you guys had to both like have a swimming competition, they will walk on water and you'll drown, right? You're literally not compared to them in any way. And that person is the person that goes and flies to countries and to plains in Africa or whatever to go and calculate the amount of water in a reservoir to view to view weather, whatever it is, and he only specializes in one market, soybeans. Let's say soybeans. He goes and calculates everything he possibly can on a fundamental basis. Who's buying and selling them? Who's merging? Who's starting a new soybean farm? How many soybeans are there going to be in 100 years, in 50 years, in 20 years, so on and so forth? All these questions he asks and answers for himself. And that person, 6 billion times smarter than you, percentage points. And on top of that, every other market in existence, every currency, every commodity, every indice has a person like that. And that person has the most money, the composite man. And when that person knows what's going to happen to that soybean farm in 10 years, he begins to accumulate or distribute positions. And when he does that, that's where we say, thank you for the information, buddy. We're going to piggyback now. That's what we do. Fundamentals do not matter at all, because we will never be on the level of fundamentals as these people are. And if you want to dedicate your entire life to being one market, you literally have to forego a life, okay? You have to go and decide to literally become the market. You literally need to be the market, understand everything about it if you ever want to be on that level of fundamentals. Therefore, fundamentals don't matter to me. They matter to me in the sense that someone's doing all the work for me and they're accumulating and distributing and I'm getting to catch their trend. But for me, I don't give a fuck, right? That's the fun way to think about it. That's ultimately how you have to think about it, okay? Bro, you do not have to copy paste a bunch of messages. I will see your messages. Stop copy pasting. My God, let's go back up here. Holy shit. Like I said, I work through all the questions, or at least I try to. If I don't get to them, you can post them another time. Do not copy paste multiple times. I see your messages. Next time I see a copy paste though, I'm not reading it. Many of the time, my pending order got triggered and instantly go to my stop loss. Either incorporate the spread or that's normal. Oh wait, Benwick, yeah, you're funded. Yeah, that's normal, right? I'm sure you, when that happens, you're like, hell yeah, part of my strategy, baby. Couldn't we use volume to help with that, to know if the bullish run was done or not? You can if you want. I don't need to use it. I can see it in the form of structure, right? That's how I can teach it too. And that's how a lot of people here trade. A lot of our profitable members don't use volume at all. How would you handle a minus 10% drawdown? Reduce risk. Like I just spoke about. Stick to your strategy, understand your strategy. You can't handle a drawdown like that if you don't understand your strategy. A client that's giving you money can't handle a drawdown like that and will pull out their money because they don't understand the strategy, because they haven't spent the time testing it. Okay? Fundamentals affect the market, but those effects are already reflected in price. Exactly, just like I said, right? What do you do when you lose 2 trades like that, then miss an entry? Like, is there anything you do to keep your head on? Yeah, I understand my edge, and I understand that over time, over the long run, it's going to pay off anyway. Right? And I don't pile in. There's no reason. If the entry misses, it misses. Just like that EU trade. Even though I was wrong like 2 times in a row, and then the third one I was right, and I wasn't able to get an entry, doesn't mean I forced an entry. There's no reason. Which broker you use? I'm trying to find an American broker that I can use right now, because I want to be like with regulated, but it's really hard. Prosperity right now is the one I have in Discord is probably the best one that I found for like US members, 1 to 500, all that stuff. But right now I'm looking for ways to start up with a VPN and trade with a crypto exchange. Because honestly, I love the spreads of crypto on exchanges, and it's 24/7. So honestly, like it fits my personality perfectly, where I can log on, look at one market, and see if I want to take anything or not, right? Like it would be much better for me. So if America lifted its regulations, I would love that, but sadly, that's not what's happening right now. Hey, to use mainly FTMO account or to trade, or what other broker you account mainly use? Currently, like I said, Prosperity. I'm looking into my crypto, and I'm looking for a larger account with sadly a 1 to 50 US broker, but no, I'm not with FTMO. Protect the principal at all costs. Yes. Yep. Max 5% loss a day rule is great. Before that happens though, I check my mental state. If the losses has affected my objectivity, I quit for the day regardless of what my current loss for the day is. That's a perfectly fine way to think about it too. The man that takes 1,000 losses in a row and continues to trade needs to write a book about self-motivation. The complete eternal trader, man. You read the book. I don't think there's 1,000 losses in a row, but it's very close to thinking that way, because these people, like, you don't understand let me open up this book and read to you guys, just show you guys, read to you basically these histories, these trade histories that these people had. See if I can find it. Oh, here we go. Annual, that's annual. Oh, here we go. Okay, month after month. So this is one of the guys that is now manages like the $1 billion hedge fund and stuff. Here's his overall 1 year, just during the year. So every month's ROI or return on investment, or RR. So in January, 2.5% he made, great. February, 18.92, great. March, -8. April, -20. So now he's already negative. May, +17, he's positive. June, -10. He's literally break even, I guess, at this point. July, +61. That's a profitable year now. August, +1. September, +11. October, +14. November, +20. December, -2. Overall, I think that's what? Like 80%, 90%, right? And there you go. And that's on multi-million-dollar accounts, which you have to also realize, right? So, and that's month after month, right? So this isn't a great example of just huge losses, but like the person on the left of him is +24, -12, +55, -15, +4, +2, +53, -20, -34, -5, and still profitable, right? Like this is how you have to think. mentfx, can you get even more advanced about liquidity? Not really. There's ultimately swing highs and swing lows. They have liquidity above and below them, and we use that to predict runs, trends, supply and demand zones that need to be mitigated, and we trade from them to next liquidity points. Remember, there's not always a like in-depth hidden concept that you've never learned. Like there's no such thing. There's information that you have, and it's how you use that information. I think it even had a quote in the book. It literally said something like this. It said, given the same information as everyone else, the most profitable traders, or the people that succeed the most, are those that understand how to use that information differently, or use it in their own way and create a set rules. And what smart money is it's a set of concepts that everyone understands. Even retail understands these concepts, but it's about how you create a system out of them, and then how you stick to that system's rules to make money. And that's where profitability comes from. There is no holy grail that someone knows that you don't, right? Everyone knows the same thing ultimately. And it's about what you do with that information. That's it. Anton, are you really 18? No, I'm 21. I'm literally 22 in 9 days though, so that's exciting. Holy shit, the first 2 years was a complete mess for me, man. Shit. GU outlook for the week. Yeah, sure, we can do an outlook. I'm down. I think I had a few outlooks, but we'll look at that in a sec. Actually, let's look at GU right now. Why not? Get rid of this shit. I don't need these indicators on here. So GU for the week. Okay, so actually I haven't liked GU because of the way it's been moving, but let's do our best to create a bias if I was to be trading it. Probably be looking at a lot of EU, or any of these. Like this is my watch list right now: EU, GU, AU, UCHF, UJ, gold, and GJ. Gold actually I don't look at. I looked at it for someone in the mentorship, but GJ. So these right here are kind of my main watch list, and these are all just kind of major pairs, right? Like lower spreads. That's why they're here. There's no other reason than that. Then, as we know, clearly we have this break of structure higher. I'm gonna just play with this here. Here we go. All right, perfect, perfect. All right, clearly have a break of structure higher, and this has all just been a move back down. That's why I had this zone right here selected, as you all saw the beginning of the thing of the buy. So this is where I would be looking for buys right now. Ultimately, looking for a displacement on probably an hour or a 4-hour chart. Looking for a displacement to trade from. So we would drop down to a 4-hour. You can see we're just kind of stuck literally in this range right here, right? This is just the main range we're kind of stuck in, and there's nothing in here to be taking. This is just minor structure. I don't really want to study that right now, especially since market's open, but yeah, market's about to open. It's just going to play around in here. Go to 1 hour. Just looking at this, clearly we are stuck in another range, or as we like to say, consolidation, or as we like to say, snowflake accumulation. So I'm already looking at this thinking it's a snowflake accumulation. Ultimately, what I would want to see is a momentous, not this type of break, a momentous break above that kind of really just pushes up and gets higher than, basically is bigger than, here, this is liquidity grab, right? This is how I think about it sometimes. Like this is what my mind almost does. I want this break to be bigger than that, is how my mind's thinking. Because I don't want it to be a liquidity grab that then just wants to go short and keep on liquidating lows. I want it to be a liquidity grab or a continuation that shows me that the market wants to switch. And as that happens, whatever is created here as a demand zone is where I will look for a buy in the form of one more confirmation on a 1 minute or lower time frame to go long. That's it, right? That's how I would look for the bias on GU just for the start of the week. Nothing else too crazy there. We're just stuck in a huge range right now on the 4-hour and even the 1 hour. Like really nothing in here. Wherever the last S&D zone is, which is like this one, yeah, that's what we're trading off of right now. So like you can have that refined now because we know that's where it's trading inside of. There we go. All right, just the last down move before the up move, as you understand. Just to show you guys on another time frame for those of you that are new. Here we can even refine it to this, right? Unmitigated last down move before the up move. Where did this go? Okay, cool. So we're in it right now. No confirm to go long yet. If you were on a lower time frame, you had this huge move up. So this actually is a nice move. And if you did get to confirm, this was a great buy right there, which would have been easily broken even by the time it came back. But again, this was Friday, so I wouldn't have been even trading this. But I wouldn't look for another buy in here right now. I'd wait for another shift in structure to show us that it wants to go long, right? Because if we're looking at this from an MB perspective too, we have MB number 1, which has been validated with this move here. And now we're looking at MB2 being traded into right now, right? So whether it wants to go lower here or not, we don't care. This is all MB. If it goes lower, great, as long as it stays above this. If we then get that push up that validates that, we know that we're in a double MB validated bullish market that we can now look to take higher, right? So that's just the basic GU. If I was looking for something, that would be it. Otherwise, I'd wait for something to kind of finish, and then I'd be on the inside of price looking for whatever moves I can inside of there, right? Back and forth on the much lower time frames. Probably holding less shorts, but holding the longs, hopefully trying to catch the low of a long for that move up to go and target, as we understand, at least the 4-hour MBs, I guess you could just say up here, right? Something as simple as that, or you could refine it to the last up for down. But in this case, I probably wouldn't actually look for sells here, only because we're coming from a buy area here. However, if this does start of the week break down, and again, the type of break comparing the liquidity grabs of previous liquidity grabs, I will look for this point, if that's the point created by this impulse, which it still is, to look for shorts down, just like that, right? So that will be my outlook on GU, ultimately. Yep. So fucking awesome. Feel like I was just eating candies then. I had no idea this type of world exists. Any tips for when starting an FTMO challenge and you start off in drawdown? If you understand your edge that you should have already put in enough work into to understand, you shouldn't be worried about that because you understand how you should be managing your positions. Okay. If you started an FTMO account or you started a live account, a large live account, without doing that before, be scared because you don't know what you're doing. That's basically it, right? Like, I'm not going to be like, oh, you got this because you started without knowing what you're doing. No, that's never going to be the case. It's clearly proven that if you don't know what you're doing, or if you haven't put in the time to understand your psychological edge, your own psychology, and your statistical edge, you're going to fail over the long run, even if you start passing your FTMO, right? You need to have a strategy and a rule-based system under your belt, or else it doesn't matter, right? Ability to the webinar, could you do an outlook for EU? So that's my GU, basically. EU, what was I looking at here? Oh yeah, that was a missed trade I had, right? I was talking about earlier. Yeah, so fucking sad. Yeah, there was that missed trade, never got up there. And then we broke down, but again, notice how the break happened. The type of break that you see as liquidity grab. So as that happened, I stopped looking for sells in here, broke above, and then continued that bullish break up. We're testing the top end of this again. I think these will all get cleared, but we can take a look at a higher time frame. I haven't looked at this in a while. Let's reanalyze. Sure. Yeah, ultimately, I'd look for potential sells in here. Just like that. Clearly with the liquidity above here and efficiency in here. Bearish structure, moving down. There actually could be a point in here too. I hate the fact that this wick looks like this. This is just stupid. This was the news release. We can go to a higher time frame and take a look at what's going on there. So yeah, that's that wick. Ultimately, yeah, I'd be looking for sell still. If we get structural breaks, I'll look to take that up into this daily zone. Otherwise, be looking for sells there. And break the structure. I still like this up here too. These would I would honestly just be looking for price to sell from here or here, and inside short-term sells into there or buys up as structure begins to unfold to these places and potentially these places here. Right, that's basically it for EU. I've been looking at this for a while though. And the same thing happened here as I just spoke about, right? We had the breaks of structure lower, we failed to go lower, then failed to go higher, and at this point I was still bearish, right? This is the example of what's happening here. Even though this is a bullish break, the fact that we're failing to push significantly higher, and again, look at the last liquidity grab, like anything, you can just grab any and compare it to the grab here. You can clearly, let's line that up with the low. There we go. You can clearly see that this is not a continuation, but more so, like we just said, a grab of liquidity, right? That's how you can use that idea to infer whether or not you're bearish or bullish. And like this, is this a liquidity grab or is it a continuation? For me, that's more of a continuation. So sells from these areas here makes a lot of sense, right? Hey, mentfx, I'm on my break is now a copy paste. Yeah. I'm gonna start putting that in front of all my messages no matter what. Will you cover the GJ move you mentioned earlier? I'd like to see that. Yeah, so I'm releasing, I'll be releasing a YouTube video on this GJ move. Oh wait, where is it? In here. It's just because I didn't take this, like I said, but I saw a lot of you take it, so I was just talking about it because I released a public YouTube video where I said, even from this point here, that price should continue to these lows, and lo and behold, it's been continuing, and I know a lot of you caught the sell down. So ultimately, all we're looking at here is, I know a lot of you were even watching this 4-hour zone, right? Price broke down, 4-hour S&D zone, unmitigated, even though it looks like it is, if you zoom in there, it's unmitigated. Price comes and taps into that unmitigated S&D zone, right? Taps into it, clearly undergoing some kind of Wyckoff structure, then shifts bearish, or on a lower time frame, you can see it clearly shifts bearish. Multiple zones it could have been a sell from. You refined it just to a normal 1-hour zone. You have this last up move before the down move. And if you go a little bit lower, you can easily refine that, as you can see here, to the last S&D zone, which was, you can see this mitigation, not mitigation, but this mitigation up here, the wick, comes down, fails to break lower, comes up to mitigate whatever's inside here, and then breaks down, leaving behind this. So in my eyes, that's the last supply zone. This is kind of the subsection 6 of section 2 material. Comes and mitigates it literally perfectly. Again, I did not catch this. I did not catch this at all. But comes mitigated perfectly. Partials at the lows partial 50% right there, just because we understand that if this is taken and keeps going long, it makes sense. And then we could keep going to keep on aiming for the lows here, which are, as you all recall, the daily bearish structure we have continued to deliver to. And this has not shifted yet. So this is still, ever since this break here, this has been clearly bearish, probably bearish still. Right? Does MB structure plus Wyckoff work better in higher time frames? For me, I don't think so. I think it's all the same. I think every time frame is the same. It's just one takes longer than the other. I finally can join a live webinar. It's like 4 a.m. here. Holy shit, dude. Welcome, though. That's awesome. Something I was once told that I'm practicing now. Paper trade until you are never surprised by what happens. Then paper trade that much again. Beautiful quote. Anyone asking about whether they should take a FTMO challenge or start funding a real account, answer this question for yourself. If you can look at this and you feel this exact same way about your own setups and your own way of viewing trades, then you're pretty much ready. And again, it's not financial advice, but in my mind, you'd be ready, right? If I felt like that, I'd be ready. So that's a great quote, Crypto Fool. I like that a lot, man. How many hours a week is a good time to spend, or how much do you spend weekly, or is it based on a max percent loss? Stop trading. What do you mean? Like, how much time a week do I spend trading? Hey, do you use mainly FTMO account to trade, or what other broker do you use? I think I answered that. Again, please don't copy paste, guys. Hey, do you use it? Hey, do you use it? Holy shit, man. Looking forward to your algo trade start. Been learning a few terms on the matter, so I'd like to expand my knowledge. Blessings. Awesome, dude. Happy you want to learn that route too. And it's awesome because it creates its own mini passive income too on the side, right? I'm not going to answer that question because I have answered. Ment, how do you factor in spreads and commissions in your risk? Can you show an example? So for instance, let's talk about this trade right here. Actually this stop loss would already be pretty big. It's like 75 pips, right? So, but what I would do is if you see the entry of this 30-minute candle is, move this over. Oh shit. FX calculator is nice too, but okay. So let's say this is what, 75 pips. Let's assume just a risk of $100, 75 pips. So what, like 0.13 lots? Okay, so we know we want to open 0.13 lots on this, and that's equal to 1% risk. This is going to be, I think it's different because it's GJ, but just assume 0.13 lots is 1%. Here, let's make it easy. 0.10 lots is 1% risk on this trade. Okay, now the entry would be at 151.213. 151.213. Okay, but we understand that the spread on this pair is almost always, let's say, 0.006. Okay, which means that we can't just place our limit at this. Instead, we need to factor that in. So instead, what we do is we go 151.213 minus 0.006, because technically, if it, the fuck just happened? 151.213 minus 0.006. So technically, we have to place our limit at 151.207, because if we don't, and if it hits this price, we will be entered at this price, which is what we need. But if we only put this price in, we won't get entered, even though it hit our zone, because we haven't factored risk in. I mean, our spread in. So now we understand that the overall risk is not the pips we had before, which in this case would be whatever this is, 75 pips. Instead, it's 151.319 minus 151.319. Instead of it being 75 pip risk, it's actually 112 pip risk. So what I would do is I'd put 112 pip risk on that 1%, which is 100 on 100, 100 on 112, 100 divided by 112. The fuck is this? 0.89. So I think I did this math wrong, but I literally can't do it on GJ because I don't know how this thing works. I usually just use a lot size calculator for it. But that's how you factor it. You just add the pips on, and now you've factored in spread fully. So it's still locked in at a 1% risk. And now you can see what the commissions would be on that and add and subtract basically a lot size amount to account for that commission if you want to keep your risk at a strict 1%. But in my mind, I very rarely account for commissions that crazily, right? Yeah, there you go. Because in reality, even if price moves 2 pips in the profit or even 1.5 pips in the profit, commissions become positive, right? You have to understand how commissions work, and I can make a video on that in the future. But commissions and stuff like that is stuff you can find almost like anywhere, right? Hey, do you use mainly FTMO? Okay, guys, like just you don't need to copy paste, man. Apps play. They're both Apple and Android versions. Nice. Thanks, Gerald. You enter the commission and spread and it factors everything. Oh, maybe, yeah, there might even be online calculators that do all that. You input the percentage and account size, pair and SL, and it will tell you the lot size. Yeah, so you might have to factor in spread yourself. Can you do this strategy on any time frame as you are showing the daily? Yep, any time frame at all. You could literally, if you wanted to, look at weekly zones. It's going to take a lot longer to get trades, but you could look at a weekly zone, for instance, and look to confirm it on like a daily or a 4 hour, right? If we don't find that. Right. And you can look at, for instance, MB, break structure, double MB, entry, and you can take that down. This is the same entry criteria you would use on any lower time frame. There's no difference between the higher time frames, just that they will take significantly longer to set up. That's how it's always been. What book is he talking about? Had to step away for a bit. It's called The Complete Turtle Trader. Really good book. Nor it does not calculate spread and commission. That is broker specific. Yeah, so you could go and find one that might allow you to put those in as well. But yeah, like I said, if you're selling, you want to account for spread by making it lower to account for that spread so you get tapped in. If you're buying, you don't want to just buy that level. Actually, wait, you buy from asking? No, you actually do. So you can increase that spread like that, right? What book is he talking about? This is motivational. Thank you, dude. Hey, do you use mainly FTMO accounts to trade? No. And markets are open. Nice. We love that. Hey, do you use mainly FTMO? Bro, you don't have to do that. I'm gonna backtest corn after this. Nice. Nice. Any chance on a super quick bias on UCAS structure? Yeah, makes sense. This break is really large, so it's probably coming from somewhere in here or here. I wouldn't even worry about this too much. And I think that if you're looking at this red structure, there's a good chance this is red structure right here, and it might just break right now, and you could look to short it down. This is a pretty big impulsive move that's grabbing liquidity or whatever. I was up there, so we might get a bigger pullback. I mean, yeah, this is fine. This is normal, standard. Yeah, was hoping for exactly this sort of clarity on Wyckoff. Nice, love it. When price reaches an S&D zone, is it normal or okay if he break through it with a wick, then react to it and goes with our bias? I just talked about this for I think like 30 minutes. So make sure you rewatch the webinar after this and check that out. Hades mainly FTMO. Okay, you're literally gonna get banned, bro. Using ATR for a stop loss. Yep, just doubling it. That's how they do it. That's how they did it. I don't do that. Like I said, if you do build a swing trading system or an algo system, this is something you're probably going to do. But like I was showing you, this was how these turtles or these people traded, and that's how they made 150 mil. And but the main point of it was to show you that the rule-based system is what made them their money, not speculation, not random fundamentals, not subjectivity, but rules that they've outlined and then followed religiously. Hey, to use mainly FTMO? Nope. For a trader that only trades EU, what is a good secondary pair to trade that is sort of like EU, if you know what I mean? Something that's not correlated. Because I think that if you trade two correlated pairs and you're wrong on one, you're going to be wrong on the other. So if you're trading EU, go trade like, I don't know, AJ or EC. Like, I don't know, something on like CAD JPY, GJ is fine too, right? Like it doesn't matter, but uncorrelated makes more sense, right? Because if you're wrong about one, you can be right about the other. Right? GJ, we got GJ photo. Let's see. Yeah, makes sense. Makes some sense. Yeah, makes sense. Makes sense. Is Wyckoff the only way for confirmation entry? Nope, not at all. I actually teach this in depth on the other webinars, and I actually myself don't necessarily use Wyckoff. I use the ideas and the rules of Wyckoff to understand my own entries and to refine that, right? I don't have, there isn't a different entry criteria every time I see an entry. It's not like, oh, this time I'm gonna buy the sign of strength. This time I'm gonna buy the test. Ooh, this time I'm gonna buy just the first break. Oh, this time the double MB. Ooh, this time the MB. No. It's a set strategy that I use myself that, again, is going to come with your own refinement. But understanding what we do and why we do it, and then being able to study that on the chart is what's going to create those rules for you. Can you check my analysis? My bad if I sent too much. No, it makes sense. Hello, do you use mainly FTMO account? Why is everyone copy pasting the fucking? Are you guys like, what's going on? Hello? Are you guys robots? Like, FTX is very good. I don't think they allow US traders. 1 second crypto SND zones, baby, join us. Gotta love them. Yeah, I'm gonna, if I can get on an exchange and trade crypto 24/7, oh my god, that'll be amazing. 1, so much higher leverage. 2, much lower spread, and 3, 24/7 markets, which I think is awesome. I think it's super cool that it just moves 24/7. I know some people in the mentorship have made a full switch to trading just that, right? Which broker, please? I love you. I love you too. Nice. Me too, love you. Matech, stop spamming. Philip, stop spamming. I love playing. You guys are so fucking crazy. Question might sound dumb as hell, but how do you also incorporate commission when you're calculating your risk? Just do the math on that. My brain is not suited to handle math right now, as you know. I literally had to pull out a calculator and I still failed, so we're not in that zone right now. By the way, the next YouTube video got face cam. No, it does not. I don't even have a what's it called? A webcam. What? The Turtle Trader. It's a book about turtles and risk management. Recently found a decent crypto trading platform called Femex. It used to use Bybit, but they've been banned from serving UK traders recently. Oh, that sucks. Sorry to hear. Can you please write it? Cause at work. You'll be able to hear it after. I'm gonna have all this uploaded on Monday, along with a bunch of one-on-ones. I'm gonna start uploading this week because I just got my gigabit internet, so we're actually finally in a decent internet situation, so I can finally get that out to you guys. Which broker do you use to trade Forex? Prosperity Forex, the one in the, you can see it in here if you want to go check it out. There are other great options if you're not a US trader, but some people that have been using this like it. So by all means, like, feel free to use it if you want. I'm not sponsored by them or anything. This is just my affiliate link. That's all, which you can get like that. It's like one of those Groupon gift codes you get, right? It's nothing crazy. But yeah, that's that. How can we saw if higher low is protected? How can we see if higher low is protected? I think we covered this in webinar 14 or 15. I'm not sure exactly. Someone else can clarify this. Or if you go into other course material, our boy F. Breves created this beautiful document with a lot of timestamps on the webinars, and it continues for a long time, for another 487 lines. So all the webinars almost for questions that are usually frequently asked. So you can go in there, see if the answer comes up, because I know I've gone over this. But like I said, I think if you're new, or even if you've been here a while, working through the webinars can't hurt. Again, imagine you're paying millions of dollars for them, so go watch them, and they can truly help and change a lot of your perspective on certain things. Sorry, I might miss, did you explain the indicators you have up on your screen? I don't trade those indicators, just so you guys all know. I'm not telling you guys to go trade them. The point of showing you guys that was to show you how a simple rule-based system allowed for these traders to make over $150 million over 4 years. The point of that is to show you that if you can go and tap into an edge, even if it's something as simple as a double MB setup over and over again, you will be able to find profitability if you're able to stick to the rules you've laid out. Right, and that's it. Please tell me you are not from this earth. I'm not. I came from Mars, bro. I saw Bezos on my way down to earth. Knowledge without experience is merely philosophy. Experience without knowledge is ignorance. That's great. Yeah, you guys should read this. Gaining knowledge and taking action to have a new experience, which produces a new feeling. Next, memorize that feeling, which moves it from the conscious mind to the subconscious mind. Yep. Makes sense. Literally the ways of being a trader. Like, a lot of this is literally the process of kind of breaking up your mind to start thinking in a completely different way, right? You can look at GJ. I think I did. Which broker do you use to trade Forex? Bro. I'm gonna start telling people not to repeat questions at the beginning of these. Holy. Thank you for the free YouTube content. You and the other person literally changed my mind about giving up on trading in financial markets altogether. The mentorship is helping me make exponential leaps. That's awesome, man. I'm really happy to hear that. That's really good. Nice. There's Wyckoff in there. There's Wyckoff in everything, baby. You don't think GU will go lower to target liquidity? It could, but again, I don't make random assumptions, right? What I do is I have a system-based approach to how I want to look at the market. I outline the zones I want to buy and sell from, and I allow those zones to hold 15 to 20% of the time. But when they hold, I allow myself to confirm that entry as I do. Again, section 1 through 3, why I utilize all three sections, because it's necessary, and I look to get involved. If it goes to target liquidity, I probably might not get an entry. If it does go, I might get a break even. If it doesn't go, I might get a plus 10, a plus 5, whatever it might be, right? I follow the trend and I trade with the trend. I don't just suppose what might happen, right? I just kind of follow the rules I outline for myself, which you'll be able to do once you outline rules for yourself as well. Canton, can you take a look at gold, please? Still short on it, even after that big wick. Just overall short. Nothing crazy on that. I'm not trading it right now. There was like one entry on it this week. I didn't take it, but I sent it out before it got taken by some of you guys. Was it in here? Oh, I guess I'm looking at this area to look for sells. Pretty much it. Other than that, I think there was a great sell on it earlier this week. I just don't know where it was. Yep, I deleted it accidentally. Let me see if I can find it. Hour. Oh yeah, there was a trade in here. Yeah, okay. It's very recent actually. Ever since that break right here, basically said, you know, we have sells from whatever S&D zones we have left in here. This got made, broke down again, had new S&D zones formed. Last up move before the down move. Great entry trades in there if you were able to get them, holding to new lows right now if you got into the sell. I'm not in the sell. I did not trade gold at all, but I did send one of these zones out or something to continue taking short. And now, I mean, ultimately it actually came back down into this zone, which can make it bullish again. But if you did sell this, it'd still be holding to this low after partialing at whatever lows were here and now being at break even. Just stuck in this little consolidation range right here. If we break below this and it's impulsive, probably going to continue short. Otherwise, look for shorting opportunities up in here. Basically it for me on gold though. I've been shorting it for a really long time. I've been saying I want to see it clear these, and until we really get a break of like, I mean, if we get a break above this, I'll start to be bullish on it into some higher areas here. And if we get a break of this, I'll be bullish into all the highs here. But other than that, I'm just following the structure on it right now, and structure's clearly been bearish. We've been bearish since up here. We've been bearish since in here. We've done webinars and we said we've been bearish since in here, and we finally had the drop. And all the news outlets in the world said, how the fuck, the fundamentals didn't line up, why is it dropping? And we're sitting there going, it's been bearish forever. It had its bearish move, right? Like we follow the trend, that's it. My voice is being lost, sadly, and I have no water left. I'm probably gonna end up cutting this out soon because we're about an hour and 40 in. I'm surprised there's about 140 people here right now, holy shit. You guys are awesome. Which broker do you use to trade Forex? Prosperity FX is really nice. Prosperity 4X, the one that is in the hashtag broker section. You can check that one out. The exact thing I have, yeah, buddy. That's how we do it, man. Which broker do you use to trade Forex? Me, man. Might just get Elon Musk's new robot to trade for me. Emotions eliminated. Yeah, bro, my Tesla car just sits in the garage and trades Forex for me, man. LQD, FX, and Traders Way, not bad. Don't know about them, so. But if they work, right? I mean, there's many brokers that are really good. Good idea, Hanad. Nice. Anybody from Slovakia or the Czech Republic? I'm not from either, but I am Russian, so I think, doesn't the Czech Republic, no, the Czech Republic speaks Czech and Slovakian. Never mind. But my buddy is. Off to skydiving. See you guys tomorrow. Peace, man. Have a good time. This is a redistribution. Nice. How to avoid guessing the top or the bottom of the market? By having a set of rules that you use to get involved or to stay out of trades and not guessing whether you're at a high or low. When do you want to upload the one-on-ones? I will be uploading them Monday, starting to upload them Monday, and they should all be out this weekend. And if you're interested in one-on-ones, every week I'm going to have only the calendar open for the week. I'll post the link in here, so it's first come first serve. I sent it to some of the people that have already one-on-ones. Will be updated every week. Calendar. All right, and then we'll post it in here. Yeah, so it's only gonna be for this week, so we already have Tuesday and Friday done, but Monday, Wednesday, and Thursday is gonna have some days. So good luck. If you're in the webinar, congrats on on seeing this first come first serve thing. But don't just take them just because, please. You know, come with questions. If you don't have them, wait for another week. It's perfectly fine, right? I'm going to probably start limiting the one-on-ones to like maybe 1 or 2 one-on-ones a month. Probably one-on-one a month. So, you know, you come with a real question, with real questions, and we get to work through something, maybe a top-down, something like that. because ultimately you're going to get very similar answers from me, and you're going to get similar approaches and treatment that you get from asking questions here. Maybe you'll get a little bit more hands-on, right? But ultimately it's going to come down to your own refinement, and that's what you're going to learn a lot if you do take the one-on-ones. But by all means, you know, this is mentorship, and I know I didn't offer one-on-ones before, so it didn't have to come with it, but I want to be able to help you guys. I love being able to talk to you guys, and I think it'll create some nice new content for the people in the mentorship. Yes, how many hours a week do you spend trading? It depends. I'll set my zones up, and sometimes like I won't get anything. Sometimes I'll have a few zones tapped, and I'll watch maybe like 6 to 9 hours, maybe more a week, 2 to 3 hours a day. But I'm always on the charts too, because I'm always working on content and mentorship material, right? So all my life, I guess. Magic key solves all your problems. Yep, my order's waiting right now because they have some issues, but this is also an amazing management tool, which I am also getting my hands on, Michael. So, is algo trading an EA? Also, how do you feel about EAs? I like them unless you're going to go buy them from people. Then they don't work. You have to, if you want to trade EA, you have to make your own EA. If you don't make your own EA, you're going to fail. Same thing goes with signals. You can't trade other people's signals. You'll never be profitable. Okay, you need to make your own signals, aka learn to trade yourself. Okay, that's all it comes down to. Same thing goes. If you get an EA from someone, you're going to fail. If you get signals from someone, you're going to fail. If you make your own trades, you're going to make money. If you make and test your own EAs, you're going to make money. Bitcoin, been bullish on it. Haven't changed that. Pretty sure. We can take a look at it really quick. Yep, still bullish on it. I had a really nice bearish play, I believe. Oh yeah, we did, from right up here. Also, did not catch this. It was forward tested, so I did put this up during it happening, which was great, but did not trade this. Don't have an account with exchange and didn't want to take it with the bigger spread on my broker. But ultimately, very simply, we have the break of structure higher, looking for continuations at the demand zones, looking for sells back down. The way this is grabbing it makes me think it's probably going to come right back up and continue bullish. It could. If it comes down, great. We have areas to buy from. If we get lower, you'll clearly see we tapped into our move downwards from the structural plays that were just refined. And from there, we had a 1 minute, I believe, MB entry that was refined. So we had the shifts. I wanted to sell here, never got there. Shifted again, new MB, shifted again, double MB. I was happy with it. The last move inside that MB was this one, and this one had an entry at the open of this inefficiency with the stop loss here, and had another right here. Again, did not take this, but both would be 0.5% risk in this case, at a 1% maximum risk. And the entry was hit, break even at this low being made, and we're off. And then partials at the structure point of, I believe, the 15 minute. Let me take a look. Yep. So looking to partial that 15-minute structural point to go short, and now we're breaking that. So ultimately waiting for either this to go bullish, or this to go bullish, or this one down here to go bullish, or just continuing up into very, very long-term. I just drew this on here for fun, but ultimately this very, very long-term ment block or demand zone, whatever you want to call it. Like, see what I was looking at. If I can find the perfect zone, I think it was a 3-day. Weekly? Yeah, okay, it's just a weekly. So again, very simply, you have this breakdown. That breakdown is coming from here. This whole move is being supported by this move here. So ultimately, shorts from here will probably, if we do get shorts from here, it's going to put in place a very large run on liquidity, back down to these levels here. Otherwise, we're just going to continue bullish because it's clearly bullish and displacing to the top side, and momentum is somewhat to the top side. But if we start to fail here, and then start making moves up into here, there's a really good chance we start to see the dumps, right? But again, I don't trade the swing trade of my system on the higher timeframes because I don't need to, and instead I'll confirm those lower timeframes in the way they deliver. I'm really liking the very short timeframes when backtesting, yep, because they happen fast and they're nice. I'm scared though that I'll get killed trying to actually execute such trades. Any advice here? Do any of the mentfx vids address execution at all? What do you mean by that? Like, there's live trading videos which are showing you technical executions. There's the paper trading that you see in the live trading as well. And there's the higher time frame ones. If you're scared about executing on such lower time frames and you can't execute fast enough, you have to go to higher, because if you're not fast enough, you're not fast enough. Otherwise, what do you mean by that? I'll help you answer this if I get a little bit more depth from that. I just bought Magic Keys on screen version. Does the risk management math for me? Money well spent. Nice. I'm waiting for my real one to arrive. Copy pasted it. Thank you for your lesson. Maybe I'll do a giveaway of a Magic Keys for you guys because I bought 2 accidentally, but I was like, fuck it. I don't need to cancel it. So maybe I'll do a giveaway of one of them for you guys. We'll see how it goes. But go follow me on Instagram or something. Copy pasted. Thank you for your lesson. Thanks, Ben. I've been backtesting and so far I'm up 69% after 60 trades, but I've been holding trades for the whole swing, but sometimes the swings are like 28 RR, but because the swing itself is not complete, so price makes a 1 to 16 before pulling back and breaking even. How can I approach this style of phenomenon? Because I like to hold till full swing completion. Well, again, this is all about testing. If you find that your system is fully profitable, like you're up 69% after 60 trades, and they're closed trades, and you're up that much percent, then a floating profit of 16% has to be allowed to float to go to break even if it has to go, because that's how the system works, right? So this turtle book, like I said, if you go and read it, phenomenal. Why? Because some of these turtle entries, some of these entries that they had ended up running 100% into profit, 100% of profit in the first like day, and then came back down for a -2 without even break even. And they wouldn't take profit. They wouldn't, because they stuck to the rules. There would be days where something was up 1,000%, and they'd have to give it up and come and get the profit at 400% or so, because they allowed their management to always dictate the rules. They never subsided. Even though they understood that they could have taken that 100 RR, they didn't care because they understood that the edge was in the fact that the rules were profitable over a long enough time. And if you stuck to them without allowing the emotions to take you out at a 116, for instance, that then comes back to break even and makes you feel like you're doing the right thing. But then if you took out that 1 to 16 and then broke even, you'd be set for disaster because you're now diverging from the rules that have already created profitability for you. This is how traders fail, not because they don't have the right system or the right knowledge, because retail systems are also very, very profitable. It's because they don't manage their risk properly over enough time. And over the long run, they believe or start to think that they need to change everything because they feel like something might not be working, because they forgot that what their rules did in the very beginning. And that's where funds blow up, that's where traders blow up, and that's where psychology gets into the way. And that's why psychology has become the 90% rule thing for most traders. Okay. Can you do one more example on targeting liquidity on like the daily time frame to give yourself the bias for the day? Same thing as like what I did on UCHF, right? My entry, if we think about this for a second, very simple, not on the daily, but same thing goes. We had a break of structure. I was looking to sell up here, pull back, another break of structure. I was looking to sell here. Price taps in. Where am I targeting? The liquidity low of that next sell. That's it. No difference. My first entry, where was it? First entry, fully misses. Doesn't give me the entry. I was looking at this distribution down, breaks down, looking to sell this ment block right here. You can see right at the inefficiency, never gets there, breaks again. I went to a 3-minute, I think, to view just multiple structure time frame just to see where it's like what it's doing a little bit higher since it's moving away from me. And upon that, you can again see very similar thing. You have your breaks of structure, your break of structure, and the last up move before the down move was right here. Again, I didn't just take it with this. Spread was fully factored in. I think it was about 1.5. I did total, so it was like that. And that's the trade back down, but yep. Right, but again, it's the equivalent of if that was a daily candle, just targeting the daily low. Same thing, just a little bit lower time frame. 1 hour, breaking structure lower. What am I looking for? To continue targeting that next low. And again, an area that small was able to produce a trade that ran over, I think, 60 RR or 50 RR. My FX book on the web has a great position size calculator. That's true. Game changer webinar, simple, clean, and healthy. Thank you, dude. I appreciate that a lot. When did you start trading? When I was 10 years old or 11 years old. Started with binary options, literally full-blown gambling, but loved it. I thought it was awesome. I thought I could find an edge. Never did. Lost a bunch of money when I was really young and decided that this is what I want to do full time. Probably the worst way you could make up like a system for yourself after losing like everything. The ATR SL is used for EAs, I know. Yep, because it's based on how much on how much price moves, and when you're increasing that, then the odds of you being on the right side, even if you're wrong about the trade, is in your hands. Like it's profitable. Or it's positive. I lulled. Could we see Ethereum? Probably same thing as Bitcoin. Probably just moving higher with the structure. I'm not going to look at it right now. Ment. Nice. FX Choice is a good broker. Traders Way are great. By the way, I'm not saying this. If you're listening to this on your headset or something, that's what people are writing. I don't actually know if they're great or not. US based. Oh, Trader's Way, maybe. We'll see. When will we meet Ment? Yeah, we'll do a meetup in the future, don't worry. I'm gonna go to McDonald's with you. Don't forget to update your Chrome. Yeah, dude, I haven't upgraded my Chrome in years. Do you know any crypto exchange that allows us to use CTrader and or MT4? I've searched, but I can't find one. Nope, I don't. But Prosperity, the broker I have listed in the mentorship, if you want to use it, it has MT4, right? So you can use that. What if you're not from the USA? Can you still use that broker? Yeah, of course you can use it. I'm just saying USA regulations are terrible. They're the worst regulations almost anywhere. So if you're anywhere else, you're set to pretty much use anything. Webinar 14, Webinar 14. Yep, exactly. You really don't have a webcam on your laptop. I don't have a laptop. I have like a whole widescreen ass monitor. I just control F the document anytime I wonder anything. Lots of stuff has been covered. Yep, exactly. Yep. How to avoid guessing the top or bottom. I think we answered that earlier. Ment, do you trust offshore brokers with big amounts of money? I think Prosperity itself is an offshore. I don't trust many. I know Henko Trade is also offshore. They might be okay, but I'm not 100% sure about them. But Prosperity, I haven't heard any negative things about them. Just positive. I know some other YouTuber like uses it too. So from what I've seen, it's good. Again, use it on your own risk and accord, but I haven't seen anything bad with them, and they've been pretty consistent. What about adding extra 10 pips to my entry above the S&D in case they grab liquidity before going in a direction? That's part of what you want to do. Go for it. I don't do this, right? I allow that liquidity grab or that loss to happen if it happens. That's it. What broker do you use for Forex? Nice. I'm going to watch iRobot after this. Nice. Make them one a week like the webinars. One a week? No, because dude, like we have so many members here. I can't do one a week for everyone. It'll literally be insane. I wouldn't even be able to do like one for every single person, right? But the thing is, a lot of people realize they don't really need the one-on-one, but just need kind of the community aspect once they've seen the content, because they recognize that the content has ultimately everything you need to then go off on your own and begin to actually work, right? Why not trading crypto in Binance US? Because you cannot sell it. They don't allow perpetual futures, and there is no leverage. So it is absolutely dog shit. Can't you use FXCM or Owanda? Yes, you can, but their spreads are dog shit. When your trade hits break even, do you re-enter at a discounted price or do you leave the trade? Unless I have a setup criteria that I use for myself, I will not re-enter. I have no reason to. That is FOMOing into a trade that technically should be broken even, right? The point of a break even is you get out if the market turns against you. When it's breaking even, the market is technically turning against you, which means if you're re-entering, you're just taking on the same risk for no reason, right? That's a huge discipline, yes. 1,000%, I'm all about discipline, but now, bro, I'm closing. Okay, they weren't up 1,000%, but that's what I mean. This right here is what got people fired and let off the program, because the main guy realized that over time, this would never get you anywhere. Like, you might think it will, but it won't. You'll get your one payout and you'll be happy about it, and for the rest of your life, you're probably going to begin to fail, because you're the second you stop following one set of rules and you just take something because the number looks good or the percentage point is up, and you know your probability is that the trade is not going to run that high, that's where you fail. Because then if that trade does run to 3,000%, that's 2,000% you left off the table, and that's 2,000% that you can now lose in your future drawdown, which is going to happen because that's part of your system. That's why you need a system that you follow, because there are going to be times where the inevitable happens, the impossible happens, and that's when you're going to be on the wrong or the right side. And if you're on the right side, your system is doing what it needs to do, and if you're on the wrong side, your system does what it needs to do and takes you out. That's it. The only way you win this game is with discipline. 100%. This book, amazing for that too. Clarification on execution. You kind of answered. That's good. If I can't enter trades fast enough, I can't. Just wondering if you have any hints or tools. Magic keys. Yeah, they're good. Yeah, they do. Yep, really good. I don't even have them yet, but I could see how great the tool is, so I'm going to get one. Is your screen at 21 by now? I honestly have no clue. Is there a way to check that? Display settings, maybe? About? Oh wait, this is just my computer. I don't know. If someone asks Anton about which brokers he's using, he's gonna liquidate this weapon. True. Do you have any real life friends that you see in person that also trade? Yep. I have a buddy of mine that's actually starting his own like group and stuff. He trades options only, and he statistically approaches them with models without any technical or anything like that. And he does great for himself, but he doesn't have like large capital enough to make like full on living from it yet. Thanks for a great webinar for me. Also, what broker do you use? Could we see AMD? Yeah, sure, why not? What's on AMD? All right, let's go to daily. Clearly bullish, nothing about that. Bullish break, still probably bullish. If it gets here, great area to look for buys. Otherwise, we're probably gonna reaccumulate to keep going higher because that's how trends want to stay in motion. Most of the time, you might not get full on pullbacks, right? Like here, you got a great pullback right to the last SND zone, right? Beautiful entries would have been made in there. Run to the high, hold on a little bit of your pie because it's stocks, literally let that run. Right now, 4 hour or something. Like this is illiquidity. This is why I don't like stocks. The market, illiquid as fuck. It sucks. But structure, point, structure break, last up move before the down move, great entry there. Last up move before the down move, same thing goes. You can look for sells up in here, basically, right? Or you could refine that to here. That's really deep. Or you could do this and just look for the, oops, let's go like that. Look for the sells to continue back down, right? To keep clearing probably the liquidity resting here. Right, that's all I would do on AMD. But again, this is what an illiquid market looks like. And when people don't trade it as much as they trade something like currencies, you're going to be waiting a lot longer. And there's going to be a lot of shittier moves, right? That's it. When trying to execute on 1 minute. Oh wait, what happened here? I'm thinking about going back to binary options, but trading smart money. Dog shit. Terrible. No point. 0 point. Literally go to binary options, flip a coin, and just martingale if you want to do that because it won't be profitable. You are literally paid 0.7 RR every time you're right with binary options. 0.7 RR no matter what. So if you're using smart money, which is something that can put you into 1 to 20, 1 to 50% trades, you're literally handicapping yourself for no reason. So either you got the biggest balls in the world, right, or you just want to lose your money. Like I don't think that's smart. Is 1 hour supply and demand zones good to use for intraday trades? Yeah, makes sense. Anything from 15 minutes to an hour, even the 4 hour, because you know 4 hour zones can be hit and then you can intraday it. When I get this down, no, don't do it. Again, not financial advice, but don't do it. When trying to execute on 1 minute, etc. Yeah, that's fine. How long it took for you to be able to trade like you do right now? I mean, since I started learning, 12 years, 11 years. Why? Oh, lol. I mean, yeah, I mean, think about it. If our strategy makes money on the basis that we're able to catch larger moves, right, and not just one-to-ones, then why would a platform that when your trade runs 1 to 50 that pays you 0.7 for every dollar you put in be profitable? Right? Like what the fuck? Right? Like it makes no sense. Right? But yeah, let's see. We have about 100 people in here, so a few people have started trickling out. So that's all good. I think we're gonna cut this short. GG, go in your direction. Where's that? Up, down? It's literally just open. Man's already excited. It's like just open. It's barely moved. It's literally barely moved. Oh wait, yeah, the buys from here makes sense. Yeah, like I said, we have that displacement up. Buys inside of here, just like you sent in that photo. Find trades in there, whatever it might have been. Maybe even 15-second entries. Oh yeah, there's decent entries in here. Break that. Come test it. We're off. Literally perfectly as well. Jesus, would have been a great trade. Yeah, spread is crazy. Exactly. Yeah. This spread is insane. This is why I wouldn't be trading this. But again, great trade. Hands down. If you got that, congrats. Beautiful. The question is, who got him in the trading? Literally me myself, dude. Not even lying. I was just a little fucking crackhead gambler when I was young. GU got decent entry on 30 seconds as well. Yep, exactly. Right. So definitely can see that. Makes sense. Makes a lot of sense. Might be something even better on 5. Nope, it's all there. Yep. All the same. Nothing different. Bearish structure. Shifts bullish. Clearly some kind of Wyckoff going on. Shifting bullish. Clearly more Wyckoff. Could be looking for buys in here already. But again, spread is too large to even capitalize on any of this right now for me. So not happening. Not happening. All right, anyway, I'm going to end the recording there. Thank you for everyone that participated, that's seen this. That's webinar 19. Peace.